fundamentals. Even if we knew the fundamental, we don't know how traders are going to react to it. So the only recourse we really have is to look at a chart, look at some kind of a tools that we can gain from a chart from software such as the one that I'm going to talk about. It's Vantage Point Intermarket Analysis software, which, as its name implies, is going to be looking at the intermarket aspect of trading and talking about the whole range of markets. There are situations where if you look at markets like stocks, and you look at oil and you look at gold, sometimes they're all going the same way. So you need to be aware of where all the markets are and why intermarket analysis is an important part of analysis, or it should be part of your analytical studies in any case. We're going to look at some charts, try to talk about some of those charts as to whether we have trends and how we're going to trade them. We're going to look at a couple of charts, first of all, that we are going to talk about that will, we're going to drop back here to coffee first, that obviously have some nice trends that you can see in there. When you look at coffee, this is a 3-month chart. It's a 37,500 pound contract where 1 cent equals $375. Now, we have some nice trends there. We see that we have a trend here. If you go from this bottom down here to this top up here, that was roughly a 50-cent move to the upside, $18,750, $375 per 1 cent. Then we had another situation where the market then kind of made an almost V-type reversal and shot down, took a little over a month to go down, and dropped more than 70 cents, $26,250 per contract. Now, you can see that there's a great deal of value in trading trends, but in a market like coffee, when you look at the prices that we have and the amount of margin money we have to put up is $7,500 per contract. You can see that there are some real nice things to have if you are in the right position, but that's a little beyond the extent of many people's accounts. When we look at accounts, you have to take into, figure into how much are you willing to risk, and a lot of experts will advise that you risk no more than 2% of your account on a given trade. Now, if you have a $100,000 account, 2%, $2,000. Maybe coffee is doable, at least on a 1 contract basis. If you have a $20,000 account, you're not going to go too far in a market like coffee. Or let's take another one that also has some great potential, and we look at soybeans. Again, you go from the bottom here to this top. These are both incidentally about the same time frame. We're talking here a trend in soybeans that was to the upside, which was kind of in keeping with what everybody thought because the crop was deteriorating. And that up move, that was about a $9,000 move to the upside. And then about the same time, when everybody expected, well, this is going to continue because, we have a pretty much of a short crop type situation, lots of demand, the possibilities that this market could kind of break through and go sky high even further than it already had, even though it was already at historical highs. Well, the drop here was more than $3 in a little over a month. That's $15,000 a contract. Now, how do we get on board those trends? You can see we'd like to be a trend trader. We like those big numbers. When we're in tune with what the market is saying, the market is, the fundamentals may be saying everything, but sometimes when the fundamentals seem to be saying one thing, the market's going the other, as it did in the case of soybeans here in September. Then you have to kind of take a look at what else is going on in the world, what else is happening to the various market situations, because obviously if you are in it on the right side, you have one thing. If you are in it on the wrong side, it can hurt you very badly very quickly. One of the markets that we do need to keep an eye on all the time, and this is just kind of related to what's going on in the current situation, is the U.S. dollar index. You can see in September when soybeans are going down, dollar was going up, kind of that inverse effect. So it's part of the intermarket analysis that you have to be aware of. When you put it side by side, take a look at what's going on with the various markets, put the soybeans alongside of the U.S. dollar. You can see that they are kind of like direct opposite, the mirror image, and so there are clues that you can get by watching other markets. And when you have other markets that suggest one thing, the dollar is kind of a key one anymore because of its kind of influence as what they call an outside market. And outside markets have had a big impact on a number of commodities, and specifically some of the grains and so forth. And in fact, all commodities pretty much reflect what's going on in the U.S. dollar. So never overlook the possibilities of how the dollar can affect what's going on. Now, if we want to take a look at some of the things that are going on in the market, we need to kind of say, okay, how do we trade these trends? What are we going to do with them? We're going to take a look at another market that is probably a little closer to what most people are interested in, because not everybody is going to trade coffee. As I mentioned, the costs are a little bit prohibitive, the risks are a little prohibitive. Not everybody is going to trade soybeans. There also has some volatile action. So we'll get to one that is perhaps a little more familiar to a lot of people, and that would be the E-mini NASDAQ. The E-mini S&P, another one. We've covered that in a number of other webinars, so I'm using the E-mini NASDAQ as kind of my little example today and talk about how we're going to set up for trends if they're available. Now you can see in this particular case that we have situations where we do have some possibilities for trending type of markets. We have the situation in here where we had the trend kind of nice, not too bad. We also had this plunge right here. I wouldn't call that a trend. I call that more panic, what was going on at that time, because when it drops so suddenly, so fast, it's pretty hard to catch that. It's like catching the falling knife type of phenomenon. But the NASDAQ is, pretty nice little contract to be able to trade. The margin is $3,500. It's less than the S&P 500 E-mini, $20 per point change. And you know that we have some fairly sharp changes in the NASDAQ from day to day, from week to week. The average daily range is about 40 points. That was what it was until we got into that August time period. And it's a mover, but maybe not quite so dramatic as you have seen with some other individual stocks like the Amazon stock that we saw yesterday, which had the 20-point gap on the open to the downside, or you can consider Netflix or Google and Yahoo and some of those others have had their moments. So by using the E-mini NASDAQ, you kind of get the tone of the whole market without the danger of the individual stock, about which you may not know that much. You can see what's fairly well available in the with the NASDAQ in terms of the more technical stocks. Now, one point to mark on here, and as I mentioned in previous webinars, is that we need to look at what type of zones are likely to create the most action. In this case right here, we're going to put a little box in the area of what I consider a potential battleground, potential battle zone area. Those are the previous highs that we are now approaching and actually kind of getting into that area. Around the 2400, 2420, 30, somewhere right in that low 2400 area. This is a potential turnaround spot. Something's got to happen at that point, either to go through it or revert back into the range that we have had. So either one of those could produce some nice trends, and that's what we want to be able to prepare for. Now, in this particular case here, where we have all of these prices or all of these marks on here, we have probably more marks on here that we need. So we're going to take out this one, and we're going to revert back to only a 2-month chart, and then we're going to back it up a little bit to get a better look at what is going on. We're going to back the time frame back here and show only since about the let's go back to about the 1st of June or so, just to kind of get a feel for what we're talking about with trend trading and using some indicators that we're going to be using. Looking at this chart, when we look at the NASDAQ over the last 2 months,